This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Clinton Donnelly, who's the CEO of CryptoTaxAudit. Clinton, welcome back on the podcast.
Hey, it's great to be back with you again, Tony.
Yeah, Clinton, last time we spoke, we were just mentioning it before the recording, was December 2022. I'm glad we are out of that type of environment. It was a brutal time with FTX and much more, but it's good to see you. And we got a lot of important crypto tax items to talk about.
Hey, and I want to, that was the time of FTX, and I just got your book and I read it. It was a great read for anybody who wants to catch up on where things. You talk a lot about FTX, and I want to thank you for personally signing my copy here at the bottom, Tony.
I appreciate that. So, Clinton, before we get into all the important topics, tell us about CryptoTaxAudit and all the great work you guys are doing there.
I'll just be direct with you. We are the largest crypto tax prep firm in the US. All we do is crypto tax returns. We have our own gain calculation where we calculate your crypto gains. We prepare tax returns, and we prepare them with an eye towards the expectation of people getting audited. So we put extra stuff in there that you wish was in there if you knew in advance you're going to get audited. And then the other thing we do is we defend people in audits before the IRS. It's one thing to teach somebody how to pitch a ball, but until you've actually done it and played the game, you don't really know what you're talking about. And that's we do. We have, at this point in time, we've done approximately 50 IRS audits of cryptocurrency. And I'm really proud to say that we have about a 35% win rate on refunds on these audits. So that's pretty significant since the national average is 0.5%. We also defend people when an audit goes against them. We'll defend them right up into the IRS Office of Appeals, and we'll defend them into U.S. tax court. I'm really proud to say we got three cases in U.S. tax court. One of them completely resolved, where the IRS wanted 1.5 million in crypto gains from our client. And my in-house forensic accountants just devastated the IRS calculations, and the IRS folded with no charge to the taxpayer. And I have another one where they're looking for 2 million. They did the gain calculation twice. Both times my forensic accountants documented. I mean, really, we're talking hundreds of pages of all the errors that were made, and they're about to walk away from a $2 million request, so make it as a no change audit. And the third one we got going, which is pretty close to wrapping up, was a like-kind exchange case where frankly we're winning it, but we're eventually going to settle out of court to avoid costs. But we're going to get, that was a very significant Pyrrhic victory for us.
That's amazing.
So, honestly, most of our clients are ultra high net worth people who really don't want to be audited. And we've done about 4,000 tax returns. None of our returns have gotten audited. People come to us to get defended. And I think that's why people come to us, because, we have people that come to us. Talked to a guy the other day, had 11 million transactions per month. Other guys doing, high-end DeFi, high frequency traders, degens, people with just, 7-digit incomes that want to be safe. So they come to us because, our reputation is the best in the US.
That's amazing, Clinton. And I think it's important for folks to not ignore taxes and really pay attention. And I mentioned that in the book as well, that look, you're going to make profits, you're going to make money. You have to be mentally prepared, and you leverage like your service, especially if you're getting a lot of gains. and button it up because you don't want to mess with the IRS. And I personally, I was sharing with you before the recording, when I'm taking profits, 50% I automatically allocate to, okay, I'm leaving this to pay taxes. I may not have to pay 50%, but just in case, I don't want to have headaches with the IRS.
Absolutely. And the IRS, my slogan that I tell everyone is a very simple slogan, mimics exactly what you're saying, Tony, is that you should make money, pay taxes, and make more money. That's the way the wealthiest people do it. Nobody got broke paying taxes as you go. It's when you make money and then try to make more money, losing it, and then you have to pay taxes, and it digs deep into your pocket and hurts. When you go that route, then it's going to be very painful to pay taxes.
Now, the IRS has been ramping up its crypto efforts, hiring more people, not just for specifically for crypto, but crypto is certainly a big item for them. And they recently launched a new form called a 1099 DA, which will require broker dealers to report not just transaction details, but also the digital asset addresses involved. Tell us about what you're seeing here.
Well, this is really significant. I will say this, whatever conception someone has about the IRS from the past, you need to lay that aside. And I call it the new IRS. They are totally different. They're radically and swiftly renovating all their systems. And they're taking a different approach to things. They're building a new culture, less of a culture of vindictiveness, if you will, and they're working together. They're actually taking a more positive attitude towards getting people into compliance, which is what they really want. A lot of people think the IRS just wants to club people, and that's not the case. They really just want you to get in compliance. Might feel like a clubbing, but they just want you to get into compliance, which is paying your taxes. Now, the new IRS, it really kicked off in 2021 when the government passed the Inflation Reduction Act, which gave maybe $80 billion dollars to the IRS for funding, and they are making radical system improvements, and they're hiring more people. At the time, in 2021, I mean, the average age of an IRS employee was approximately 61 years old. So, they were rapidly retiring workforce. They had to rehire quickly just to not lose headcount. And in addition, they want to grow headcount. So they're doing a lot of work in this area. In terms of a new IRS, they're shifting to doing things in an intelligent manner, data mining. They're moving into artificial intelligence. They're rebuilding their internal data structures in their systems, which are enormous and antiquated. And they're building them up to be quick, robust, and nimble in terms of their activities. So they're really a new IRS. That being said, they're cracking down hard. With very little additional staff, they have increased the amount of money they've brought in by 40% over the last 2 years. So this is they're getting significant inroads. And as you know, our government, I won't put any names on it, is kind of hell-bent to spend as much money as possible. And it comes back to the IRS to bring in more money to make that happen. So they're getting much more efficient and more determined at doing that. So we need to look at that. Key ingredient to that is part of the Inflation Reduction Act was the passage of Section 6045, which required the broker-dealer reporting and it's come out just really about a month or so ago. They came out with a draft form 1099-DA, digital asset. Now, in a lot of ways, it's similar to other ones, like 1099-B. If you trade stocks, you get a 1099-B. Technically, underneath, every trade generates a 1099-B. But at the end of the year, you get what they call the 1099-B composite, which is just a one-page. It's actually a very nice form to read. You can see a summary of everything you did on the stock exchange. And that's what they're doing with the 1099-DA. It asks any organization that's paying you or handling trades for you to report to the IRS. So who does that mean? That means digital asset brokers, like traditional ones like Coinbase, Kraken, etc. Uphold, but they're also going after other people who may be involved in the movement of cash for people. So this would be like a local Bitcoin. They will have to do this. And they would also be DeFi exchanges that have a US base to them, as well as hosted and unhosted wallets. And what's really got people inflamed is the obligation on unhosted wallet providers to report this. Now, what does that mean? Well, when we say, so think of it this way: MetaMask will have to report, since they're US based, they're going to have to report to the US, get KYC information on you, and then report all your trades to the IRS. Same thing with Uniswap or SundaySwap or any number of these swap systems, DeFi systems that have a US origin or control on them. So a lot of people like to say, oh, no, wait, it's decentralized. Nobody owns or controls it. Yeah, but there's still a governing body that probably initially created the Uniswap or the protocol, and then set up a governance structure. And they're probably the fulfillment party for the treasury on that swap. So they have substantial influence and control. So those sticky fingers keep an obligation on them according to the rules that the IRS brought forward last August. They're still proposed at this point, but basically everybody's obligated to do this. So what does that mean? What's in a 1099 DA? Well, it's the traditional stuff: your name, social security number, address. What was it that was sold? What price did you get, or proceeds? How much did you pay for it, if they happen to know? That it means that they're going to know the income that you made. They may not necessarily know the cost, but they'll know how much, what the IRS calls the total positive income. What's really significant to me as I look at it, which is unique, it's not there for stocks, is you have to report the wallet address and the transaction hash or ID, which allows them to go right into the blockchain and say that is, Tony Edwards' transaction. What also is kind of disturbing is they have to report the transfer in wallet ID and hash. So that means, where did this coin come to on Coinbase that Coinbase could then sell it later? All right. So what does this do? If you step back after a couple of years of running this starts in 2025. The IRS is going to have an inventory of the major wallet addresses that you personally use associated to your social security number. Now, that is a lot of information. Now, we've always said, the blockchain is open, it's public, there is encryption, but everybody can read the blocks. And there's it's a digital fingerprint. You can't hide things once you've done it on the blockchain. And this brings us to the recent indictment of Bitcoin Jesus, Roger Ver.
Yeah.
And, very famous person, and, 2013, 2014, big voice, accumulated a lot. He, and I won't go into the particular details of his tax evasion indictment, but when I read the indictment, the IRS explained how they identified this information. I'd call this process portfolio reconstruction. They call it cluster analysis. But basically, they identified the set of, in his case, Bitcoin wallets that he was using. And because they just study the blockchain using artificial intelligence techniques and machine learning, they can start to identify the behavior of the addresses he interacts with. He can say, they said this is just one of his other wallets, or was this a sale transaction? Because the behavior of that transaction is someone else's. So with this artificial intelligence portfolio reconstruction thing, they can basically recreate the picture of all your holdings. What they did is they went back to 2014, reconstructed his holdings, showed that he had control and influence over 200,000 Bitcoin, and did not account for that on certain tax forms on which he should have in 2014. Later, in 2017, 2018, he received income in the form of Bitcoin and did not report taxes due on that. Even though he was a renounced person at that point, he still would have had tax obligations due in that particular situation. But they could reconstruct that from this portfolio reconstruction tool. So this leads us to an interesting development, because a lot of people feel that if I trade on DeFi, they'll never know who I am or what I did or how I did it. And I think that's probably not true anymore. And I think that never was true, but it might. The IRS is taking a different view to it. Now, when you prepare your tax return, you have to gather transaction records and map the things. I mean, it's a whole different process. But for them to find you and indict you, it's an easier thing. Now, what makes this significant is that the IRS knows, and our work suggests that that's exactly true, that 75% of crypto traders in the United States are not reporting their crypto income on their tax returns.
Wow.
So we're talking, it's 30 to 40 million crypto traders. So you're into, a pretty big number, 20 million crypto traders. Now, a lot of these people are small. Like, you gave a Litecoin to your parents for Christmas, and they have no idea what to do with it, probably don't know how to log in. Well, that's probably not a reporting obligation. Right. But of that, you're probably down, we estimate around 8 million people who I'd say are true blue crypto traders or actively trading, and they're not reporting. So this comes to bear. Now, that leads us to another recent indictment in tax court, or in court, which is Paco Algren. Paco Algren in 2017 sold $4 million worth of his Bitcoin and never reported it on his tax return. He was indicted for tax evasion. And typically with the IRS, the only time they indict people is because, they were trading drugs and they had crypto, or they were engaged in some other fraud or money laundering, and they ran it through crypto. Up until now, that's been all the cases that we see of indictments related to cryptocurrency. It's a tangential crime that they didn't report their taxes. This was a situation where the guy legitimately sold his Bitcoin and didn't report it on his tax returns. Rather than audit that person, they went straight to criminal indictment.
Wow.
Now, what's significant to me is our company being the top firm in the U.S. defending crypto traders before the IRS, is it's difficult and expensive for the IRS to do a standard audit. We're in the middle of one audit. We got to pull a FOIA request. We got all the background information from the auditor. He spent 340 hours engaged in an audit of our one client. 340 hours. That's a lot of time. And they're losing. So, and when they do the gain calculation, we're quite successful. I mean, right now we're about 3 for 3 in terms of crushing the IRS's gain calculations. So they're not able to effectively wage the best defense they can. But when you go criminal indictment, it's a whole different ballgame. And I have a client who went through this process. Real quickly, he didn't report $250,000. IRS discovered it in 2016. The IRS discovered it. 2 men with guns and badges on their belt came to the door. His wife answered the door. These guys identified themselves, IRS criminal investigation, said, "We want to talk to your husband." Later, the husband, with 2 lawyers, went down and met with the criminal investigation group, asked him a lot of questions. He said, he refused to answer any of the questions. And they said, "We're going to be watching you." And about a year and a half later, it's 2019, about a couple of years later, he was actually indicted for this. And it turns out that they had what they call dusted his wallets with Satoshis. All right. So they, on their own, gave his wallet individual Satoshis. This is the smallest increment of a Bitcoin you can move.
Right.
And they tracked those Satoshis. And when they saw them move in the past, then they saw him, he did transactions with them and didn't report them on his tax return. And then they had him nailed for tax fraud. So what happened then is he received a package from a U.S. Marshal and at that point in time, it's over. He went and talked to two highly experienced criminal tax attorneys that both said your best hope is a plea bargain. And as it was, he got a plea bargain. He had paid about $250,000 in fines, and he was sentenced to a year and a day in jail. He only had to serve about 6 months. But once you're sentenced for a year in prison, you now become a felon.
Oh, yeah.
Your life for the rest of his life. As he says, Clinton, what's the likelihood that if I get pulled over by a police officer for going a couple miles over the speed limit, that I'm going to get away with a warning once he looks at my driver's license? No, my entire life is shaken up. And so he came to me. He had 1 month after he pleaded guilty till he had to go to court. He said, Clinton, I want to get current on all my tax returns. We quickly did gain calculation, prepared 4 years of tax returns, and he paid them. And he said, what a lot of people don't do is to pay the taxes after you've been indicted, because then they can come back at you a second time for tax civil fraud, which is a 75% penalty for not paying the taxes still. So this is the direction that the IRS is heading. Easier, it's quicker, it's more profitable, it's more public. And with this portfolio reconstruction tool, they can rope in all of the 8 million crypto traders who are in that realm where they want to audit you. They basically, I mean, they're not going to go after the lowest people. But the new IRS is being kind. They actually are issuing letters. It's called a CP59 letter, Tony. And this letter basically says, we know you didn't file a tax return for this year. You know, you made you a lot of money. We just want you to know that, if you need help, please contact us, whatever, but we expect you to file your tax returns soon. That's a real kind letter for people that they know are high income earners who clearly haven't filed. I know a lot of these tax evading crypto. So this is the best, but they'll get all their dollars. It's better to pay the taxes now, particularly as we're in the beginning of the bull market, than it is to pay their taxes in a bear market.
No, absolutely. And some of the major takeaways there is that, like you said, they're able to do a whole bunch of forensics now. And look, it's easy because it's the blockchain, right? Everything's out there with the wallet addresses, and you have companies like Chainalysis and others which do these forensic services. So the IRS could even leverage their services. And then what was fascinating, what you said, they dusted that guy's wallet, sending him some Satoshis to trace where I didn't think they would be that sophisticated to do that, but that is very interesting that that's a method that they're using to track some of these things.
IRS could easily dust all the US Bitcoin wallets. They could easily dust them all. Satoshi is it's a millionth of a Bitcoin. I mean, it's still pennies to the IRS, and they could dust everything. And once you got these dusted into your wallet, you can't get rid of them. It's not in the protocol, all right, to clean house like that. So, hey, look. So, the bottom line for anybody, just short summary is, if you have not been reporting, and I understand a lot of people not reporting, they didn't know how to report the first year, then the next year comes along and they felt like they had nothing to gain, and then now they realize a couple of years have gone, and they've dug themselves into a hole, and they don't know how to get out. If that's the case, I just highly recommend you call us up. Go to CryptoTaxAudit.com, go to the contact page, schedule a consultation with me, and we can talk confidentially about what your situation is, how to calculate where you're at, start to move you to a plan of compliance. There are some great tools out there you can get installment agreements for up to $250,000 on your crypto taxes. We can set up strategies where maybe you file certain returns before other returns. We can do a lot of things, but it starts by getting out of your seat and making a phone call, and we can start moving some people to a safe place.
Yeah, man. Like I said at the beginning, I don't want any headaches with the IRS. And, the stories you gave there of, people getting arrested, going straight to criminal indictment versus, hey, you need to pay these, right? Like a warning or something. They're taking it 0 to 100. But it's great to hear that, you're saying that the culture is changing a bit, where there being a bit more lenient as relates to crypto, where they're sending out letters and things like that. I'm glad to hear that because there's a lot of people, like you said, who got maybe $100 in Bitcoin from a family member or I don't know, some rewards program, but they didn't cash it out or they didn't report it. I don't think they should get criminally indicted for that, but at least the IRS can work with them.
Well, and you're absolutely right. I mean, I have a lot of the smallest investors are the ones that are most hyper worried about the IRS. And I mean, I had one guy, he invested $900, took it out when it went down to $700, and he spent, like $295 to talk to me about his loss. So these guys are too worried. Don't worry about that, and not unless you're up your total positive income trading is over what they call 400,000. Um, I want to tell you about another court case of Paco Algren. Paco, no, take it back. I told you about Paco. I want to tell you about a Cincinnati couple. This is in January. This is a Connecticut couple that didn't report all their income in 2006 through 2010. And the IRS indicted them 18 years later for failure to file and report all their income. If you don't report all your income, there's no statute of limitations protection if you're in excess of 25% in error. So the IRS has all the time in the world to come after these things. So don't assume. I mean, think about it. 18 years later, you got kids, mortgage, sports. All of a sudden, your life is destroyed, and you're looking at millions having to be shelled out, 8 million in their case, and then plus criminal time. It's the days of kind of hiding from the IRS are over. Big tech has come to the IRS. We can't hide like we used to. We can worry, be angry about all that, but the fact of the matter is you can't.
Now, I think it's a good segue into the following, where Senator Elizabeth Warren proposed an anti-millionaire tax, which would, transform the IRS and give them a bit more power to kind of do these things. And look, if you're positioned to make, really good gains off of crypto, this could be a bit detrimental to you. But, what are your thoughts on what she's proposing?
Well, so in summary, anybody who has over 50 million in net worth would be subject to a 2% tax on that total net worth per year. That's a wealth tax. A wealth tax is kind of like property tax. Every year you have to pay for the pleasure of owning your house. So it's a 2% tax on just the mere fact that you own this wealth. Now, this is only for people with over 50 million. Hey, is that you? Is that me? Hey, probably not. It's really like a fraction of the percentage of the US. And doesn't everybody want to tax the rich, right? That's great. Tax them, don't tax me. But it's the details when you get into it. How will the IRS know how much somebody has? Well, they're going to have to add an additional form to your 1040 where you report your total net worth. How will they know how much your net worth is? This bill includes giving the IRS money and authorization to do the audits on that, to do the collect information on that. So, for example, you get a 1099 int for interest from your bank. They'll now add another field for the total value of your accounts on the total value of that account at the end of the year. So now they're going to know, IRS will now learn the total amount of money you have. Up until now, if you don't move something, if you hodl it, if you will, IRS would never know, would have a reason to know. So now to make this compliant, all banks, brokerages, anybody who are custodians, including Coinbase, crypto accounts, MetaMask wallets, they'll all have to add this about what's the total value of these holdings at the end of the year to their 1099 DA or all the other 1099s. And all of that, so we can crack down on this like little teeny 0.5% of people that make over 50 million. All right. So why such a giant information grab? Yeah.
I feel like that's the Trojan horse, right? Oh, it's for the millionaires. But I feel, as we've seen with government, right? You give them a cookie and they want a glass of milk, they'll take advantage of it. Eventually, it'll come down to the common man, how much you have in your portfolio, in your bank account, which, insane abuse.
Well, you smelled it out. And it's more insidious than just that.
Mm.
So the bill requires that the IRS audit no less than, and that's the wording, no less than 30% of all taxpayers who are subject to this wealth tax.
Mm.
On the surface, that seems like, well, we're talking about a 0.5% of the population. No, 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 no. The wealth tax is 2% above 50 million. It's 0% if you're under 50 million. So, you and I are subject to the wealth tax, but the tax is at a 0% rate. So when this bill says that 30% of the people subject to the tax have to be audited, that's 30% of everyone.
Mm.
And 30%, and 30%, I mean, I was just looking at the IRS audit rates just recently, and their typical audit rate is like 0.1, 0.2%. On the very, very high wealth people over 10 million. Their audit rate has moved up from this year it was 11%, but 30% is significant, super, super significant. So you're the IRS. If you try to audit the wealthy people, they'll tie you up in court so long that it won't be worth the effort. All right, that's what Europe found out. They did a wealth tax. The OECD has come out with papers saying wealth taxes don't work because the wealthy can spend more money on lawyers than you're going to get from them. But the poor person, or not you and me, the average person who we have simple wealth lives, will be audited. Now, what's the benefit of that audit? It's intrusive. Yeah. And they're monitoring all your cash, all your wealth. And oh, by the way, if you, as a person under 50 million, fail to accurately report all your wealth, you're subject to penalties. Those penalties get as high as 50% of your wealth. So this is what this is all set up is you can look at it in political terms, but it's basically to turn the IRS into a crushing force on the population, and all of it under the guise of taxing those rich people.
Wow. So this is proposed. I don't know if it has a likelihood of making it into law, but what do you think about that? Do you think it has any legs?
Elizabeth Warren is an interesting person. She's like the number 2 person in the Senate for the Democrats. If Schumer died, Elizabeth Warren would probably, take over. She is extraordinarily productive in putting forward bills and pushing her way. She is a thought shaper. She'd be the number 1 thought shaper in the Senate. This bill by itself has been introduced back in 2021, and now it's been reintroduced here. Certainly at this point in time, it has a lot of campaign benefits for her. I'm going after the ultra rich, we're going to tax them. And doesn't that draw votes? But ultimately, the thoughts here incorporate themselves down the road into bigger bills, like that Build Back Better bill. All right, that came through a couple of years ago. They wanted to throw all sorts of taxes, including a wealth tax, in at that time. So this is basically shaping the minds. It allows her to start to shape thinking of how people approach taxes as they go forward to fund bills, which is very similar to the Biden bill that was came out about a couple months ago for his new 2025 budget that he's proposing. That too is a campaign rhetoric device, but it sets the conversation with the people. They get to look at the trial balloons, see how people react to it, but it starts to become, could very well be the future laws that we have to live with.
Yeah, like you mentioned, Elizabeth Warren puts out a lot of bills, but I think some folks had pulled up her record on what actually becomes signed into law. It's not great, so at least we have that on our side, but you never know, right? And we kind of have to be vigilant here, and depending on how you go to the ballot and who you pick, and calling up your representatives and much more. But on the Biden proposed 2025 budget, he has some tax increases in there. Tell us a bit about that and what he's proposing there.
It's very interesting. If you pull down the budget, his budget proposal is 181 pages. But if you want to find out how he's going to fund it, you have to go over to the Treasury Department, pull that down. It's 254 pages. It's even bigger than the budget itself. So, to give you an idea. When we look at all the ideas they have, they all come down to two major ones. One is to jack up the tax on corporations from 21% to 28%. So that's basically an additional third tax on corporations. Now, and the simple feeling about taxes on corporations is, do you think taxes are going to take a loss, or the businesses are going to take a loss? No, they're going to pass it on to the consumers. So this is an inflationary tax on consumers. The second thing he wants to do is jack up taxes on what they call the high income earners. They have set a relatively lower threshold for high income, but that pays for 99% of everything in the budget. Now, the proposals that they have for taxing high income earners is they're somewhat controversial. Some simple ones: the NIT tax, the net investment income tax. They want to bump that from 3.8% up to 5%. So that would affect investors that make over $200,000 during a year. The big, really controversial one is that they want to implement a minimum tax on the wealthy. Again, they don't get into the details, but it's going to have a lot of similarities with what you saw all over with Liz Warren. In this one, they basically take the attitude that capital gains should be, or typically are taxed when you realize them. That is, when I sell it, because honestly, you've never experienced any income until you sell it. The wealthy have the option of buying something and holding it for decades, maybe even a lifetime, and so they want to tax this. That's the argument, and they want to tax on an annual basis your unrealized gains. All right, so they want to charge you tax on the gain that you haven't received yet, basically. Now, that amount of tax is 25%. That's a staggering amount of tax on top of that. This is a minimum tax now, and there already is a minimum alternative tax. That's just on income. This 25% tax includes this unrealized gain tax. Now it gets into a lot of detail. I'll just simply phrase it this way. When you tax unrealized gain, you're simply stealing from the future.
Yeah.
All right. Because in the future, the taxpayer is going to sell it and you're going to have a lot there to tax. But instead, by taking it along the way, there's none left over when he actually does sell it. And it gets into an administrative nightmare, because let's say the price goes up now, you tax me 25%. Tomorrow, next year, the profit, it's gone down, so I'm actually entitled to a loss, and I have to track that loss against how much I've paid. I mean, wealthy people can have extremely complex investment lives, and it's just an utter nightmare. And with a little, once the bill is written, goes into law, if it ever does, then you have a phalanx of lawyers who will find the loopholes that they can just sail right through. Rest assured, Elizabeth Warren, who's made a lot of money in her position, already knows the loophole she's going to use to avoid this tax.
Right.
So, but think about it. How do we do this? Well, again, in order to know how much if this tax only applies to people that make over 100 million, well, how do I know that Tony Edward doesn't make over 100 million? And you've got this little podcast gig to make yourself look poor. All right. Well, they're going to have to put an obligation. How they do that? Through 1099 reporting on every bank, every investment institution. You have an account to report the total value of your whole assets at the end of each year. Again, we're back to this information grab where the government is going to own and know everything that we have. And, the question I think political scientists would say is, like, can we trust the IRS not to be used by political forces to crush somebody? So let's say, you make too many political statements and powers that be go in, they look at where all your assets are, and they figure out where you're weak, where you're putting all your eggs, and they attack that particular asset to crush and humble you. You see what I mean? That's the fear. And wealth taxes ultimately do not produce. Most of the countries in Europe have all dumped them, but the purpose here is not to raise more money; it's to understand and capture more data about the population.
So, Clinton, I know we're not constitutional rights lawyers or anything like our experts. Is that even constitutional with the right to privacy? And if they want to get all this data about everybody through these companies and so forth, do you see that going to like the Supreme Court where people are going to sue the hell out of government about this?
Oh, I think so. I think this will be tied up in courts. Amendment 16 to the Constitution gives the right to the government to tax income, and this also includes excise tax, which is a similar type of thing. But this is not income.
Right.
What they're trying to do is say it's unrealized income. We're taxing unrealized income, and so I think that's how they're going to finesse this. This is not exactly a wealth tax, all right, but they're taxing everything. But whereas Warren's is truly a wealth tax, I think the Biden proposal has more likelihood of getting past the Supreme Court, but it is crushing. One of the other interesting proposals of Elizabeth Warren was that if you expatriate, if you decide to give up your citizenship, you decided you're retired and you're going to go retreat, you're going to go to that dream house that you have in Aruba, and you're going to expat, you're not going to have to pay any more taxes in the U.S. because you just don't care anymore. They will then, if you have assets of greater than $2 million assets, then they're going to impose a 40% wealth tax on just that, just to expatriate. In addition to some other taxes that kick in, you could be getting up into a 70% tax bracket when you excommunicate on all your assets. So nobody's would ever want to become a U.S. citizen if you knew when you left you'd have to pay this. So it's very strange. Biden's, Elizabeth Warren's proposals are disturbing in terms of what they're trying to do that have nothing to do with ultra millionaires.
Insane. Man. It's insane.
I'll give you some hope.
Yeah.
All right. We have, for my clients, are all pretty much, ultra high net worth crypto investors. We know that they're all in the high audit range for the IRS, that they're target just implicitly. And we have developed, of course, tax preparation techniques, all legal, but help put them in a better place. But we also developed a service that we call IRS Guard Dog, where we monitor their IRS accounts on a weekly basis, and we can see when the IRS systems have flagged a taxpayer for a future audit.
Oh, wow.
And we can let you know, and this can be as far as 6 months in advance. We can also monitor if there's any other issues that are appearing on your accounts that you wouldn't know about. Mm-hmm. So this, like underreporting of income, if the IRS got a 1099 that you didn't report on your tax return, this shows up as underreporting. It's the number one way you get audited. So this monitoring service is absolutely totally unique. Nobody else is doing it. We have a number of different price points. You go to CryptoTaxAudit.com, you go to tax resolution, you'll see the 3 prices. All our clients are members, and many, many other people are following it. There's different membership levels, but the top one is basically like an insurance policy. If the IRS audits you, we'll defend you all the way through the audit, all the way through appeals, all the way into tax court for no additional charge than the simple monthly fee, which is pretty reasonable. It's $349 a month. But we have even a lower price ones for people who just want a simpler level of management and want somebody to talk to the IRS on their behalf. You and I were talking prior about a particular couple who had a tax problem, and I had a chance to talk to them yesterday. And first thing they did when they got the letter from the IRS with their accountant, they went and talked to the accountant, talked to the IRS, and like this is really one of the biggest mistakes you can make. I mean, everybody's watched the police show, right? The police arrest the guy, they take him into the interviewing room, and before the lawyer can show up, they start hitting him with some of the hardest questions. Why did you commit that crime? Why'd you kill her? Where were you on this night? And the person, they go right for the jugular, and they go after stuff. And it's not uncommon, and I think this is what might happen in this particular case, is that the case has now gotten bigger because they found more dirt than they originally went into. The people that went to it thought, if I'm just honest, that I'll get a fair deal from the IRS. Well, no, these guys are financially incented to find stuff on you. It's not a matter of looking for honest people. They're looking for dirt. Mm-hmm. So with our program, as IRS guard dog, at all membership levels, we can represent you in any interaction with the IRS, which means you don't have to talk to them. We'll do the talking for you. And we have a massive success record.
That's awesome. And I love the guard dog service. That absolutely makes sense.
It is. It's like, why wouldn't you, right? This is like a credit score, we're protecting you. I mean, the IRS is watching you. It's your chance to watch them.
Yeah, I mean, things are changing, and I think crypto investors really have to heed the warning and the things we talked about in this podcast, because like you said, they're getting more sophisticated. They can use the blockchain analytics. They know what they're doing now. This is not 2015 or 2014 when nobody knew what the hell was going on. But Clinton, great insights, great information. I got to have you back on because things continue to develop with the IRS. We'll have to talk soon, but thank you so much for joining me.
Always a pleasure, Tony. Thanks for the book, and look forward to talking to you again.